How's it going? Sean Williams with Sojourn Wealth Advisory, where my focus is helping families like yours manage their resources for the opportunities ahead. In this episode, we're going to cover how you can calculate your net worth and 7 other additional insights. Cue the intro. So in this episode, we're going to cover how you can calculate your net worth along with 7 other additional insights. But before we go any further, I did want to give you a little bit of background. We recently launched something that I think is really cool. It is an assessment that you can access yourself that goes over your potential for building wealth. And it's based on the extensive research from Dr. Thomas J. Stanley and Dr. Sarah Fala on the wealthy and their psychographics. So if you go to sojournwealth.com and then there under assess, you'll be able to take a look at the building wealth or wealth potential assessment that you can take for yourselves and share with others. Now in that assessment, it covers and talks about calculating your net worth. And because what their research has found is that those people that do typically have a higher potential of building wealth. So in this episode, we're going to cover how you can calculate your net worth. Let's start. Your net worth is typically a list of all your assets and any debts or liabilities you may have. So start off with under assets, list all the different assets that you may have, like your savings, investments, retirement accounts, any real estate, and what their individual values are. Come up with the total, and that is the total of all your assets. Next, take a look at any debts that you might have or any liabilities. They could be credit cards, personal lines of credit, student loans, car loans, mortgages, and then individually what those amounts are and what the total is. You'll find your net worth by taking the assets minus any outstanding debts or liabilities that you have, and that is your net worth. Here's a crazy statistic. The Federal Reserve publishes a survey of consumer finances every 3 years, and the most recent data that they have is coming from 2016. They found that the average net worth, the median net worth, the average per household, was $97,300. So if you took all the assets of that person, including their home, and then paid off all their debts, the average person would have $97,000 and $97,300 to show for it. Now that amount is not based off of people in their 20s or 30s. That is inclusive of the entire US adult population. So it's not just people starting out. You may be a little bit younger or starting out and thinking, boy, I would like to be average one day. But that's not what we're talking about. And $97,300 is likely not going to produce the kind of retirement that most people envision for themselves. If you were to take that as an investment, the $97,300, and let's say you were going to do a conservative withdrawal amount per year of say 4% because you don't want to dip too much into principal. And let's say that you also assume average returns in the market. That would likely produce an income for you of less than $4,000 a year. That's less than $4,000 a year for housing, food, health care, entertainment. You get the picture. Statistics like these show the dangers of being and doing average. Don't do what's average. You can't afford it. If you want to reach the extraordinary, then you have to do something more than what's average. So hopefully by now or shortly after watching this video, you'll be able to figure out what your net worth is. Now we can take a look at 7 other additional insights that it can help provide you. First, take a look at the assets that you have and look at them line by line. Consider what you own and where you own it. And is it helpful and is it helping you get to where you want to go? And if not, some changes may be in order. Second, understand the burden of debt. Take a look at any outstanding debts that you might have and total up their values. And it gives a pretty easy picture to see what you own versus what the bank owns. Take it another step and look at the interest rate or finance charges that are a cost to you for those balances. So take the interest rate and then multiply that by the existing balance, and you'll see what the annual cost is to you. Add up those costs and then think about how much money you're making for the bank that you're not making for yourself, and what else you could be doing with that money for you and for your loved ones rather than for the bank. And that is the cost and the headwinds that those loans and debt are providing for you. Third, emergency access. In case of an emergency or an unplanned expense, would you be able to access cash quickly? In the business, we call this liquidity. How soon can you turn the assets that you have into cash to have access to them? So again, where do you have cash and can you access it relatively quickly in case of an emergency or unplanned expense? This will allow you so that you don't have to depend on debt, as well as you don't incur any unnecessary taxes or penalties to access money from, say, a retirement account or some other investment vehicle where there may be a penalty for you to access it prematurely. Fourth, tax treatment. Everyone should be treated equally, but the IRS feels very different when it comes to assets. What you own and where you own it can have a very different impact on what type of taxes you have to pay on what growth you receive. So, $1 million in an IRA is very different than $1 million in a Roth IRA. It's important to understand what you own and where you own it and what type of taxes you might expect into the future. Fifth, income forecasting. Now, if one day you're looking for your investments to produce an income for your living expenses, then it's important that you have that amount of money saved so that we'll be able to generate that kind of income. So as you're looking at your net worth, understand where your investments are currently and where your investments may need to be in order to produce that kind of income and whether or not you're on track. Sixth, planned giving. Again, because of the tax code and depending on where your assets may be, there may be a more effective way for you to give money to a charity than simply stroking a check. So again, it's important to know where you own and what you own because it can determine how effective even your charitable gifts can be from you to the charity of your choice. And lastly, now that you have a list of all the different assets, you can look line by line and think to yourself and find out who are the beneficiaries listed on each one of these assets, because the differences between savings or checking accounts, investment accounts, retirement accounts, pensions, life insurance policies, real estate, have different distinctions when it comes to who owns it, how is it titled, and who the beneficiaries are, and whether or not a will speak into the situation or not. So again, it's important to know what are the distinctions of each of these different areas and who do you have named and how do you have them named, either as beneficiary or inheritor of the will. So of course, these are just some of the ways that I help clients and how a net worth statement can provide one perspective of many and provide additional insight, and why I offer my clients a financial planning portal as well as mobile app so that they can access their financial plan and that it is both dynamic and interactive. So through encryption, it can regularly be updated on as far as balance information, as far as where their bank accounts or their investment accounts, as well as their retirement accounts or any debt that they might have, and provide them a greater picture, because I truly believe that the more informed a person is, it allows them to be more intentional with their money, and that increases the potential of them building wealth over time. So I hope this was of value to you. If you enjoyed the episode, be sure to let me know, comment, share, subscribe, follow. If you haven't already, be sure to check out sojournwealth.com/assess to go take the assessment for building wealth yourself. And also, if you'd like to move forward, you can reach out to me at sojournwealth.com and schedule a time for us to talk. Until next time, sojourn well.